Wall Street is bracing for a highly anticipated week as traders anxiously await announcements regarding the Trump administration's plans for tariffs. Monday opened with U.S. stocks broadly lower, reflecting the market's unease. By mid-morning, the Dow was down 300 points, a 0.6% drop, while the S&P 500 and the tech-heavy Nasdaq Composite also fell by 0.6% and 0.7% respectively. The market is clearly digesting the Trump administration's intent to announce new trade deals or, alternatively, notify countries of new tariff rates. President Donald Trump himself stated on Sunday that the White House would dispatch tariff letters to countries by Monday noon, detailing new rates set to go into effect on August 1st. This comes as Trump's self-imposed July 9th deadline for trade deals approaches, marking the conclusion of a 90-day pause initiated on April 9th. While U.S. stocks have rallied in recent weeks, fueled by investor optimism that the worst of the tariff confusion was over, the current uncertainty is prompting caution. Mohit Kumar, chief strategist and economist for Europe at Jefferies, believes the July 9th deadline won't have a material impact on markets but will create near-term uncertainty and prompt some profit-taking. He views the letters as an incentive for countries to swiftly agree to deals, anticipating more trade agreements in the coming weeks. Despite earlier rallies, with the S&P 500 notching for record highs since June 27th due to stronger-than-expected economic data, concerns are now emerging. Brian Belsky, chief investment strategist at BMO Capital Markets, previously noted that cooler-than-anticipated CPI numbers continue to suggest a muted tariff impact, for now, at least. He remains optimistic, expecting trade deals to provide more clarity for both investors and businesses, and likely keep the uptrend in stocks intact. Treasury Secretary Scott Bessent echoed this sentiment, telling CNBC on Monday that he expects several announcements in the next 48 hours, and warning on CNN that tariff rates would boomerang higher on August 1st if deals are UN completed. However, not everyone on Wall Street shares this optimistic outlook. Scott Wren, global market strategist at Wells Fargo Investment Institute, cautions that the market consensus is overly optimistic on the tariff outlook. He expresses concern that as tariff rates settle, the economy could slow, leading to a pullback in consumer spending. Wren suggests that stocks are currently ahead of themselves and advises trimming positions in overvalued markets and sectors, specifically mentioning U.S. small-cap stocks and consumer discretionary sectors that have performed well recently, adding another layer of complexity. Trump also announced an additional 10% tariff on any countries aligning with BRICS, the economic bloc comprising Brazil, Russia, India, China, and South Africa. Gold prices fell 0.8%, and the U.S. dollar index gained 0.2% on Monday as investors shed safe havens. With the S&P 500 and Nasdaq at record highs, and the Dow close to its own all-time high, the market remains highly fluid and susceptible to rapid shifts based on tariff developments. Money